All right, good evening, everyone. So my name is Darren. So I'm from Investing Note. So today, we will be actually have a very interesting topic. How does the Middle East war affect the stock market? So today we actually have Dan as our speakers for tonight. So before we start the sessions for today, so there's a QR code over here on my right hand side. This one is a Telegram group channel. Sorry, it's a Telegram group. The name is actually Stock Market Buddies. So you can scan this QR code and join these stock market buddies. So in this group, we actually will share a lot of informations or news about different market, Singapore, US, Hong Kong, or Malaysia. So you can actually participate and join the discussion with us. Okay. So without further ado, let's welcome Dan for tonight's speakers. Hi Dan.
Hello, everyone. Hey, thank you.
Hi Dan.
Okay,
Hi.
Darren, let's share my screen first.
Sure. No problem. Let me stop shares.
Hey, just give me a minute. Okay, am I sharing already?
Yes, I'm seeing your browser right now.
Okay,
Yeah,
great.
it's full screen.
Okay, first of all, I want to thank Darren for introducing me, and thank you everyone for taking your time off to attend this webinar. I hope you all have your dinner ready. It's 8 p.m. ready. Okay, and today's the topic will be how does the Middle East war affect the stock market? Okay, so let's get right to it. Okay, first of all, disclaimer. So three very important points here. Number one, all view and opinion that's being expressed in this webinar is solely my own and it's not representative of any financial institution. Okay. Number two, this webinar is purely for sharing purposes. It's not meant to be stock recommendation or inducement to buy or sell any stocks. Okay, so with that done, let's go into this topic popular. Okay, I think this is probably my fourth or fifth webinar with Investing Note Malaysia, and I'm really thankful and grateful that you get me back again. Okay, so some of you might have already known me, but just for the benefit of those who don't, okay, I just want to give you a very brief breakdown of myself. Okay, so basically, I'm a licensed trading rep with a stockbroking firm in Singapore. Okay. MES license, this MES refers to Monetary Authority of Singapore. Okay, not Malaysia Airlines. I'm not a pilot. Okay. And I'm a SGX Academy speaker as well. Okay. So this webinar is part of the things that I do on a day-to-day, month-to-month basis. Okay. So I've been in this industry for the past 22nd year. Okay, this is actually my 23rd year. And I do mainly traditional stockbroking, advisory services, and onboarding of managed accounts. Okay, so you can see, right, I actually work very closely with retail investors. Okay, so I really hope that today's webinar, I will be able to value add to everyone here as a retail investors. Okay, I don't waste too much time on myself. So my socials are all here. Okay, you can go in and take a look. And for those who are a bit shy and who want to PM me, right, you can take out your handphone now and scan the QR code here to add my handphone number to your contact list. Okay, so with that, let's go into the topic. Okay, before I start, right, I think I need to preface that this webinar concentrate on the impact of this Middle East war on the stock market. Okay, for context, right, Middle East war refers to the Israel and Hamas conflict. Okay, and this sharing is based on the assumption that this Middle East tussle will continue to create uncertainty in the macro environment. And it's based on the assumption that there might be a possibility of an escalation in this Middle East war. Okay, so this is very important because what happened is that if you notice, right, recently we don't hear a lot on this Israel and Hamas war. Okay, but it's still ongoing, although it's not it's not largely being reported on public media. Doesn't mean it's not happening. It's still happening. Okay, it's just that it's I'll prefer to call it under report lah. Okay. Okay, so for context, right? Before we go into the impact of the war on the stock market, we need to know what had happened. Okay, I need to put out a disclaimer here that personally, right, what I'm going to share is very factual. Okay, I know there are supporters of Israel, there are supporters of Hamas, but here is very neutral. Okay, I'm not going into that. Personally, I'm a free thinker. Okay, so whatever I'm going to share later is very factual. It's just a timeline of what have happened. Okay, and not who is right and who is wrong. Okay. Okay, so on the 7th of October, right? I remember it was a Saturday. It was a lazy Saturday. Okay. I was actually reading a book, okay, at that time because it was a Saturday, there's no work. Okay. Then suddenly on Channel News Asia, there's this news that says that the Hamas force, okay, launched a special or rather a surprise attack on Israel, okay, from Gaza, okay, and killing more than 1,400 people and taking hundreds of hostages. Okay, and the next day, right, on Sunday, Israel formally declared a state of emergency, a state of war. Okay, the operation is called Swords of Iron. Okay, the aim is to eliminate Hamas military capability and ending its rules over the Gaza Strip. Okay, so the weekend is not an easy weekend. I mean, in this part of the world, it seems like just a normal Saturday and Sunday. Okay, but in the Middle East, right, it was actually quite terrible there. Okay, on the 7th and 8th. Okay, and of course, when this sort of thing happen, the head of state will usually have to come out to say something. And for this US president, right, Joe Biden, he actually condemned the Hamas assault, okay, but he put it in a very balanced way. He's not supporting like any other side. Okay, so he said Israel has a right to defend itself, okay, and Hamas does not stand for Palestinian people's right to dignity and self-determination. So he's not standing on like, either the Israel or the Palestinian. Okay, so he's very neutral. He just condemned the act, the act of war. Okay, and on 12th of October, right, Israel announced that Gaza would not receive water, fuel, electricity until the hostage were freed. Okay, and subsequently, on the 14th of October, of course, when there's a war, right, the world, the world focus will always be the civilian. Okay, so on 14th October, the IDF, Israel Defense Force, announced that the two road with safe passage for evacuation for these civilians. Okay, and on the 17th October, which is a very important date, I need your attention here because later I'll be touching on this 17th October. Okay, so on 17th October, right, there was an explosion that occurs in a hospital where a lot of civilians are there, mostly Palestinian. Okay, it was reported that a lot of displaced Palestinians were seeking shelter in that hospital when their hospital was being bombed. Okay, of course, Israel claimed that it is a Palestinian rocket attack that have failed and land on the hospital. Okay, and the Palestinian, or rather the Hamas, okay, claimed that it was a Israel air attack. Okay, uh, up till now we don't know which is which. Okay, which is the truth, we don't know. Okay, but anyway, both are not claiming responsibility for the bombing of the hospital. Okay, so on the 18th October, Biden arrived in Israel to try to express some support for Israel and try to calm the situation. But I don't think it's helpful because the war is still ongoing. Okay, and on the 27th and 28th, okay, Israel conduct a very heavy round of airstrike to attack on this Gaza Strip. Okay, after that, surprisingly, there wasn't much news on this Middle East war already. Okay, there wasn't much report, much public media. There is, okay, but it's not like, it's not like putting on loudspeaker. Okay, so there wasn't a lot of information from this conflict. Okay, and the stock market, right, somehow didn't really factor in that Middle East war after the 27th or 28th. Okay, and I'll come to that later. Okay, so now we have the context of what the Middle East war is about. Okay, so we will try to seek to find out how did the stock market react to it. Okay, we'll look at a few different market. Okay, okay. So the first market we'll be looking at is the US market. Okay, S&P. So why I use S&P? Because S&P represent the broad US market because it's the 500 US company there. Okay, I don't use Dow Jones because Dow Jones there's only 30. Okay, so you can see, right, on the 9th of October, or rather on the 7th or 8th October, when the the Middle East war broke out, right? 9th of October is actually the first day of trading. Okay, and surprisingly, instead of market dropping, right, S&P actually go up. Okay, until this date. Okay, this is actually the 17th of October, the one that I just mentioned just now. Okay, the bombing of the hospital. Okay, let's explain this part first. Why did the stock market still goes up when there is a war happening? Okay, of course, we will not know the actual reason, but a lot of explanation is that, first of all, Israel and Palestinian, this is not the first conflict that they have. Okay, they have conflict for many, many, many years already, or even for decades. Okay. Secondly, okay, the whole conflict is being confined in Israel. Okay, is being confined in a very small territory. Okay, it was not blown out of proportion yet. Okay, so the stock market may think that, okay, this could be just one of the many conflict between Israel and Palestine. Okay, so the stock market didn't really take note of it. Okay, it was only until the 17th of October when the bombing of the hospital occurs and there's a loss of civilian life. Okay, this is where the world start to take notice. Okay, the world will always take notice when there's a humanitarian issue here. Okay, so when the bombing of hospital happened, there's a loss of civilian life, market start to trend down, and boy, it was quite a drop here. Okay, it was quite a drop here. So in the next 2 weeks, right, there's a drop of about here is about 4370, here is about 41, so it's about 200 over points. Okay, and what happened next was that the market rise again. Okay, why does it rise again? Well, I would like to think that it's because, as I mentioned earlier, on the 27th or 28th, right, after that there wasn't much report on it. Okay, and when there wasn't much report on it, the stock market tends to focus on news that have impact on the stock market. Okay, other news like rate directions, like inflation, okay, like oil prices, kind of thing. Okay, so market actually ignore or put this Middle East conflict at the back of their mind. Okay, and they start to write up. Okay, the main write up, if I remember correctly, was because the FOMC in November, right? Or rather in November, they said the expectation was a late rate pause. Okay, so the market keep going up, and the economic data at that time, well, there was some cooling. There was some cooling. Okay, so the market actually went up to where it was. Okay. Okay, Singapore market. Okay, Singapore market being a follower, they mirror exactly that of the US. Okay, so on the 9th of October, they went up a few days, then they start to trend down. Okay, and on the 27th or 28th, when there wasn't much report already, they went up for mirroring that of the US market. Okay, Hang Seng. Okay, Hong Kong. What happened in Hong Kong? So it seems like Hong Kong has really no correlation at all with the Middle East. Okay, if you notice here, right, yes, they went up, but they also came down. Okay, but the magnitude wasn't very big. It's confined into a very small range here. Okay, mainly because Hong Kong is facing a problem itself, the issue itself, that is China slowing growth. Okay, when there's a slowing growth in China, fund flowing from the north to Hong Kong, we call it the northbound fund flow, will be less. Okay, so Hang Seng didn't really move a lot. Okay, it was not volatile. The co-relationship with Middle East, with the Israel and Hamas war was very low. Okay, for China, same. China after the war broke out, right? They straight away goes down. Okay, but personally, my personal view that is that it has nothing to do with the conflict. Okay, this down is mainly because of Country Garden bankruptcy issue. Okay, so if you all remember, in October, right, there was a issue about Country Garden facing some default, bond default, and some bankruptcy. Okay, and generally the data that come out of China was very soft. Okay, that is the main reason for the drop, and not because of the Israel and Hamas conflict. Okay, so I can say that even for China market, the co-relationship between the China stock market and the Middle East is not high. Okay, coming back, Malaysia. Okay, so you can see that this is the Malaysia index. Okay, so you can see after the 9th of October, right, this trade went up. Okay, in fact, it was quite a surprise that they were one of the few economies or one of the few stock market that actually went up. Okay, of course, I don't know the real reason why they go up, but of course, I have a theory here lah. I don't know whether it's true or not. Maybe the audience can let me know in the comment section later. Okay, so what happened is that in this part of the world, right, in Southeast Asia, Thailand and Malaysia are the biggest oil producer. Okay, when the Middle East war occurs, the first thing that people think of is oil, because when we think of Middle East, we will think of oil. Okay, and when we think of Middle East war, we think of oil price going up. Whether that's the case or not, that's another story, which I'll come to that later. Okay, but that is a general thoughts of the investors lah. Okay, so Malaysia being one of the largest oil producer in Southeast Asia, naturally, they might be riding on the possibility or the anticipation of an increase in oil price. Okay, I'm not sure whether that's correct. Maybe you guys can let me know. Okay. Okay, so after looking at the different market, right, what are the conclusion that we can gather? Okay, so first of all, not all market is being affected by the Middle East. Okay, primarily only as we can see, right, is the US market. Okay, and probably the Singapore market, because Singapore market always follow the US market. Okay, however, okay, the impact is not great, at least not yet. At least not yet. As you can see, when the war broke out, the S&P still went up for a few days before there is some casualties, some civilian casualties, then the market started to drop. Okay, so the impact at this point in time is not great. Okay, and beside this war, actually, with or without this war, right, there's already many other macroeconomic factors that has been affecting the stock market. Okay, for one, rate direction. Okay, everyone is expecting a rate pause and maybe a rate cut next year. Okay, but the US inflation data and all the economic data keep pointing to a strong US economy. So in this case, like, good news is bad news lah. Okay, so there's always some debate on whether the Federal Reserve will increase rate or not. Okay, personal view is that it's unlikely that they will increase rate, but we never know, because the Powell already said he will depend on the upcoming economic data, and we will never know what the data comes. Okay, and of course there's this China slowing growth, okay, which is affecting the demand, okay, of goods and services, and of oil as well. Okay, so China is the second biggest economy in the world. Okay, so when they sneeze, the whole world shake. Okay, of course, another macroeconomic factor is the Sino-US geopolitical tension. I think you all read before. I think I mentioned in my last webinar on the AI. Okay, that there is a chip war going on. Okay, US has been implementing some bans on the export of AI chips to China, and China has also retaliated by banning so-called foreign device in government agencies. But tomorrow, President Xi Jinping and President Joe Biden is meeting. So let's hope something good came out of that lah. Okay, but that is more of digression already. Okay, so you say then if you say the impact is not great, what is the point of having this webinar? Okay, but you see, because I don't have a crystal ball, okay, I cannot predict the future. Okay, just in the scenario that what if the Israel and Hamas war escalate? Okay, like for example, okay, OPEC plus get in, Saudi Arabia go in, maybe Russia think that Ukraine is not enough, they want to, put a leg in, kind of thing, and it translate into a so-called a World War III. We never know. Okay, or could it be it escalate to a religious war? Okay, because the Jews, the Muslim, or everything, and there is also the possibility of escalation of terrorist attack. So these are all the unknowns that might happen. Okay, I mean, we are not prophets, right? We cannot predict the futures. So these are possible scenario, worst case scenario, and this webinar is to prepare us for this worst case scenario. Okay, so in the event that if the Israel and Hamas war were to escalate, how do we position ourselves in this uncertain time? Okay. Okay, so I think most of you would have guessed it. Okay, the most important thing is gold. Okay, because gold is always viewed as a safe haven asset class. Okay, actually, just to digress a bit, remember, right, just now I said that the Israel-Hamas war actually broke out on the 7th and 8th of October. Okay, so actually on the 11th of October, I have already posted in a lot of my social media, like the stock market buddy that Darren has mentioned just now. Okay, the Telegram channel. Okay, I have also posted in my own Telegram channel. Okay, about gold. Okay, at that time, gold is not even, I mean, they start to move, but it didn't really move a lot at that point in time. Okay, as you can see. Okay, I also post on Investing Note, Active Trader Club. Okay, I also post on my LinkedIn account. Okay, so in short, right, if you all want first-hand information, first-hand trading ideas, okay, do remember to join all this. Okay, join the Investing Note Stock Market Buddies Telegram group. Maybe at the same time join my Telegram group as well. Both are free. If you are already on Investing Note, okay, do drop by the Active Trader Club. Okay, the admin is actually the Investing Note admin. Okay, they will approve your membership. Okay, if they didn't approve it, you let me know and I'll let them know, because there are so many people. Okay, so maybe they might have left out. By the way, this Active Trader Club now, there are more than 7,000 members inside. Okay, of course, if you are on LinkedIn, feel free to link out with me, okay, to connect with me. Okay, I also post on my LinkedIn. So these are the places where you might get first-hand trading ideas or first-hand information from me. Okay, coming back to gold, right? Okay, gold is always known to be a safe haven investment. Okay, because it's a reliable source of value. Why is that so? So actually, gold have an inverse relationship with stock market. Okay, in the general sense of the word, right? In a general sense, okay, when the stock market perform, funds will go into the stock market. Okay, when there's some turmoil, some uncertainty in the stock market, usually the fund will flow into either bonds or to gold. Okay, in this case, even the bonds are not doing well because of the high interest rate. Okay, so a lot of funds actually move into gold during time of uncertainty from the equity side. Okay, then why gold? Because it's an investment that's expected to retain or increase in value. Okay, in these times of uncertainty. Okay, because they have a finite supply. Okay, and there's always a constant demand for gold. Okay, whether to make jewelry or to make electronic parts. Okay, and if you are looking from a big picture, right, gold is very much part of a portfolio. Okay, if you are a serious investors, you have a portfolio, okay, you should have a certain amount of gold instrument in your portfolio, just for diversification purposes, okay, to hedge against any uncertainty in the stock market. Okay, so gold is very much part of our portfolio when it comes to a serious investors. Okay, but do take note that gold is not a risk-free asset. Okay, gold is still being affected by demand and supply. Okay, but the thing is that the demand and supply factors, right, is not so varies like oil, because oil can be affected by the decision of OPEC plus. It can be affected by the oil demand. Like for example, in winter time, US will need more fuel, they'll need more oil. In summertime, they will need less oil. The oil price may not go up during the time. Okay, so for oil, right, there's a lot of factors, but for gold, there isn't so much. Okay, there isn't so much. Basically, it's just people just use it as a safe haven investment, just to hedge against any downturn. Okay, now to prove my point, right, what happened is that this is actually the gold price. Okay, and this is actually the 7th of October, or rather the 9th of October. Okay, so you can see that when the war broke out, right, the oil price start to move already. Okay, so the correlationship between the Middle East war and gold is actually very high. Okay, of course, you can see that recently they have came down quite a fair bit. Actually, not a fair bit, just a bit only. Okay, they came down a bit was because, as I mentioned earlier, after the 28th of October, right, not much was being reported on the war front. Okay, so investors is like that, human beings like that. So when people don't read about it, okay, or didn't hear about it, okay, they will focus on other news that's affecting the market, okay, affecting the gold. Okay, so in this case, as you can see, the correlationship is very high. Okay, and when I post on my socials, right, on the stock market buddy, and my own Telegram channel, gold price was around here only. Okay, gold price was only around here. So you can see gold is definitely one of the asset class you can consider, okay, if the Middle East war were to escalate. Okay, how to invest in gold? Okay, basically there's a lot of ways. Okay, but the most popular, there are 4 ways. Okay, number 1, physical gold, meaning you walk into a bank and you buy the physical gold. Okay, but there is a problem here. So first of all, when you buy a physical gold, you need to find some place to store. Okay, you can store in the bank, of course. Okay, but I'm sure there is some fees, storage fee or whatever. Okay, so that is some consideration that you need to consider when you buy physical gold. Second, gold futures contract. Okay, gold futures contract is actually one of the highest correlationship to gold prices. Okay, so if you are a trader, gold futures contract is good. But if you are a retail investors, gold future contracts may not be for you. There are a few reasons. Because futures contracts are derivative products. They are meant to be trade. So it's actually more for traders, not for investors. Okay. First of all, they have expiry. Okay. So during nearer to expiry, the price can tend to be very volatile. Okay. And you have to keep on rolling. Okay. You have to roll the contract because there's expiry. So every time they expire, you have to roll again. Okay. Third reason is that for futures, for derivative product, right, usually it's a leverage product. So which means that the contract size can be 100,000. Okay, perhaps you only need $1,000 or $2,000 to buy 100,000 worth of futures contract. However, if there's anything wrong, right, let's say gold price suddenly U-turn, go down, okay, and you could possibly make a loss, and the loss could possibly be bigger than the money that you put in. Okay, so while gold futures contract have a high correlation to gold price, okay, it is also of a higher risk nature. So it's actually more suitable for short-term or day traders. not really for retail investors. Okay. Third, you have unit trusts that track gold price. Okay. So there is a lot of I'm not too sure about Malaysia, but in Singapore, right, there's actually a lot of unit trusts that claim to track the gold price. Okay. But again, there are some consideration here. Number one, unit trust is a collective investment scheme. Okay, meaning they collect, the fund collect funds from everyone, pull together and invest. Okay, so the price of this unit trust is what we call NAV pricing, is being priced by the fund manager. Okay, so it's not so transparent. It's not like stocks like that where okay, now this unit trust is worth this much. Okay, you will never know because it's always forward pricing. You only know the next day what is the value of the unit trust. Okay. Secondly, okay, unit trust depends a lot on the skill of the fund manager. So although there's a mandate that these unit trusts have to invest in companies that are related to gold, okay, but if the skill of the fund manager is not there, okay, there may be some tracking error, meaning to say that, they buy into company which have some problem in itself. For example, I can give you an example. Let's say if the fund manager buy into a gold mining company, okay, so gold mining company, so when gold price goes up, gold mining companies supposedly to go up as well. But maybe they bought into some companies that is on the verge of bankruptcy, or maybe is on the verge of a lawsuit or whatever. Okay, so there are so many factors to think about in terms of unit trust. Okay, so the correlationship between a gold unit trust, a unit trust that track gold price, and the gold price itself may not be so high. Okay, then the fourth thing is gold ETF. Okay, what is ETF? ETF stands for exchange traded funds. Okay, so basically it is a unit trust, but the only difference is that ETF is a fund that's traded on the exchange. Okay, and what is the good thing about this ETF? Number one, transparency. Okay, it is traded just like a stock, so you can see the price every second whenever the market is open. When the market is open, you will be able to know what is the worth of this ETF. Okay, and secondly, okay, these ETF, right, they have a lower expense ratio. Usually they have a lower expense ratio because it's quite they track the gold, right. In this case, they track maybe they track a gold bullion. Okay, so there's not much things to do. Okay, so the expense ratio is much lower. Okay. So this one is a article that I took out from SGX. It's quite recent, 7th of November, just last Tuesday. Okay, so as you can see, right, gold ETF turnover almost tripled in October. Okay, because of this Middle East war, right? Okay, these are gold ETF in Singapore. We call it we call it GO ETF lah, but the actual name is SPDR GO Share ETF. But for short, we call it GO ETF. Okay, even if you go into poems, right, you can see the name, you call it GO ETF. Okay, but the actual name is SPDR GO Shares ETF. Okay, anyway, for this GO ETF, the turnover nearly tripled in October. Okay, so it's not a fallacy. Okay, it's actually happening. Okay, so whenever there are uncertainty in the market, people will flock into gold. As you can see, they jump 170% month on month in October, which means that it's 1.7 times the turnover is 1.7 times that of September. Okay, so you can see the demand of gold in time of uncertainty. Okay, some data from SGX, as you can see, the top 5 listed ETF by turnover in October. Number 1 is the gold ETF. Okay, stock code 087. Okay, and this is the asset class. Okay, the top 5 asset class of SGX listed ETF by turnover in October. As you can see, right, actually gold, right, there's only one ETF. Okay, and they are the top one in October. Okay, I have to digress a bit here. So actually, yeah, the number of ETF is not one. Okay, it's two. Okay, and I'll explain with later why. Okay. Okay, so this Go ETF, right? Stock code 087. Okay, it's also known as SPDR GO Trust. So what is it? So it's basically just a fund, okay, that hold gold bullion. Okay, so it's as close as you can get really. Okay, and the trust issue these SPDR gold shares in terms of units, okay, and list it on the exchange. So when you buy, let's say you buy one share, okay, you are having one share of the trust. Okay, as simple as that. It's just like a stock market. Okay, so their objective is to track the performance of this price of gold bullion less the trust expenses. Okay, just now I said the website says there's only one gold ETF. Why do I say two? Okay, that's because this gold ETF is being dual listed, is being listed under dual currency. Okay, so we have this US dollar gold ETF, which is the OG. Okay, and we also have the Sing dollar denominated gold ETF. Okay, so these are the details. So as you can see, this is the US one, 087. It is the OG, the ultimate OG. As you can see, the listing date is way back in 2006. So it's about 17 years. Okay, whereas for the Singapore Sing dollar one, right? Sing dollar one, it is listed in 2021. Okay, so you may ask, so then is there a difference between 087 and GST? Basically, they are the same. Okay, the movement is the same. Everything is the same. The only difference is that GST, they already take into account the Forex, okay, and it's being quoted in Sing dollar. Okay, and I can prove it to you. So this is the chart of this gold ETF, the USD one, which is 087. Okay, 087. Okay, so you can see, right? Same on the 9th October, that is where this gold ETF start to move already. Okay, and on the 27th, 28th, they start to go down, mirroring exactly the gold price. Okay, so this is the US one. And this one, oh, by the way, let me go back. So you see, right? This is the US. Okay, this chart is taken, I captured it over the weekend. Okay, so the price is actually based on last Friday lah. So you can see, right, for US, these OG, these gold ETF OG is quoted at 181.93. Okay, for this one is actually the Sing dollar one is GSD. Okay, as you can see, the movement of this is exactly the same as the one that you see on the US one. The only difference is that it's quoted in Sing dollar, which after applying for exchange rate is quoted at 247.26. Okay. Okay, just to give you a comparison, right? Let me just do a live chat lah. Okay, I think it's easier to do a live chat. Okay, so this is the US one. Let's do a comparison, okay, with the Singapore one, the Sing dollar one. Okay, so you can see that the movement here and the movement here is exactly the same. You see, almost, not almost, it's exactly the same. Okay, it's exactly the same. Okay, so this is what you see lah. Okay, so there's no difference between the Sing dollar one and the US dollar one. Now you may ask, which one is the better one? Okay, it's really up to individual. Okay, if you think that US dollar is going to be strong, okay, I would say you may want to consider buying the 087, the US dollar one. If you are using a CDP link account, rest assured that CDP, even though it's US dollar, CDP still accept it. Okay, CDP still accept it. So there's no difference. It's personal preference. If you prefer Sing dollar one, you buy Sing dollar one. If you prefer USD one, you buy USD one. Okay, personal preference, I prefer the USD one. Okay, now coming back to a comparison between, you may ask, so what is the correlationship between these gold ETF and gold prices high? Okay, this one you can see already. Okay, so on top is the 087. Okay, you can see that the movement is like that. Okay, almost mirroring that of gold price. Okay, almost the same. Okay, if you need further proof, right? Maybe let's do another live one. Uh, let's do another live one. Let's just, so this one is the Go USD one. Let's compare it against gold price. Gold futures. Okay. Okay, just now I only show you from March this year to November. Let's look at 1 year. You see, the movement is almost the same, or rather is very similar. 3 years, okay, you can see that, the direction is always almost the same. And what about 10 years? Okay, so I hope you are convinced that the correlationship between these gold ETF and gold prices is very, very, very high. Okay, so if there's an escalation in the Middle East war, and like me, you believe that gold is a safe haven investment, do consider this gold ETF as an alternative. Okay. 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 Then, just to add icing on the cake. Okay. In Singapore, right, other in POEM, okay, there's no minimum com for all SGX listed ETF. Okay. Let me just show you this. Let's click on this link. Okay, so what happened was that these are with effect from 17th of January 2022, right? All SGX listed ETF, the lot size has been reduced to 1. Okay, meaning you can buy 1 share, 2 share, 3 share. No longer do you need to buy 100 share, 200 share, 300 share. Okay, you can just buy 1 share of ETF, whatever ETF, as long as it's listed on SGX. Okay, you can buy 1, buy 2, buy 3, buy 4. Okay, of course, if you buy one, if there's a minimum commission, it's not worth it. Okay, so POEMs recognize that, and we have do away with the minimum com. Okay, so it will be based on whatever account that you use. If you are using a CTP account, likely your brokerage is 0.28%. It's 0.28% of the contract value. Okay, for example, just now I show you the gold, the 087 price is about 182 USD. Okay, so the commission for that will be 0.28% of 182 USD. Okay, that will work out to be a few cents. Yeah, so you just pay a few cents, okay, for 1 shares of that ETF. You don't have to pay a minimum of 35. Okay, so that is the marvel thing of buying ETF on SGX. Okay. Okay, now after gold, what else can we take a look at besides gold? Okay, so naturally, right, what happened is that whenever there is something like, war, fighting, terrorist attack, okay, the first thing that a lot of country will think of is to beef up their military defense. Okay, no matter where, no matter what, no matter how far you are from Middle East, as long as there's an escalation of war conflict, okay, countries will usually, I would say usually, think about beefing up their military defense. Okay, and Singapore is no difference. So I took this from Wikipedia. Okay, so as you can see, right, Singapore is actually among the top 5, okay, in terms of military spending, okay, per capita. Okay, I have to use per capita lah, because Singapore is only a very small country, and we only got 5 point something 6 million people. Okay, so we cannot use the military expenditure as a gauge, because surely will rank be very low because we are only a very small country. Okay, but if you make it on a per capita basis, we are actually one of the top five behind Qatar, Israel, US, and Kuwait. Okay, so every year, right, Singapore spend a lot on their military defense. Okay, just in the latest budget 2023, right, Singapore has allocated about 17 billion to military defense. And where do all these funds goes? So all these funds, all this money will go to Singapore Armed Forces to pay for military equipment, maintenance of the equipment, the camps, okay, the salary of all the full-time or operational ready national servicemen. Okay, all these blah blah blah. Okay, and this defense budget, right, is expected to grow at a compound annual rate of 4.7%. Okay, Singapore is one of the few countries that spend a lot on military defense. And in time of geopolitical tension like the one in Middle East, okay, it might potentially accelerate the rate of this increment, this 4.7% increment. Okay, then you will say, then why are you telling me this? Singapore Armed Forces is not a listed company. It can never be a listed company because it compromise national security. Okay, so the next best thing is actually a company that supply all these military equipment, okay, technology, okay, and technical know-how to these all armed force, okay, or to all the armed forces. Okay, so there's this company, ST Engine, stock code is S63. Okay, so what is ST Engineering doing? Okay, the full name is ST Engineering, but for short, right, I just call it ST Engine. Okay, so ST Engine is actually a global technology and defense and engineering group with office all around the world. Okay, so they have a lot of customers in more than 100 countries. Okay, but the major customer is Singapore Armed Forces. Okay, so what do they do? Okay, so they supply military equipment, okay, military solution to the armed forces. Okay, and the two most well-known so-called invention or export of ST Engine is this AFV and this SARS-21. Okay, so AFV is armored fighting vehicle, and SARS-21 is actually assault rifle. Okay, so let's click in and see. Okay, so one of the most well-known AFV that ST Engine has come up with is this thing called Bionex. Okay, but now Bionex has been around for very long already. Okay, so now they are building a new one called Hunter. Okay, so you can see this evolution of their armored fighting vehicle over the years. So you can see that ST Engine actually contribute a very big part to the military defense. Okay, and for SARS-21, right, if you go into Wikipedia, you can see that not only the Singapore Armed Forces are using it, a lot of countries are using it as well. So they have a lot of variants, you know, like the light machine gun, sharpshooter, or whatever. Okay, so these are the countries that has been using it. Okay, so you can see that ST Engineering is basically okay, sorry, let me just. So ST Engineering basically is a proxy to military defense. Okay, that's a nutshell that I'm trying to put across. Okay, then next come the question. Then you talk so much about military defense. What is the correlation, okay, between this company and the Middle East war? Okay, so as you can see here, right, when the war first broke out on the 7th or 8th October, on the 9th October, ST Engine started to move already. Okay, and they shoot up very sharply in the next 3 days. Okay, subsequently they came down. Okay, so you see, why do they came down? Number one is because they hit a major resistance. I don't have the chart. The elongated chart. Okay, but if you just zoom out, right, is actually a key resistance level. Okay. Also, the next thing was that after the war broke out, right? Just like these, as I mentioned earlier, Israel is a very, I mean, the conflict is being confined in Israel. It is not being fully blown yet. Okay, so when they first spike up, okay, after people realize that it's a Israel and Palestinian conflict, which is not the first, and is still confined in that small area, okay, the price start to retrace, both because of technical and because of this rationale. Okay. But as you can see, right, they still come back up, okay, and trade around here. Okay. But the gist of it that I want to mention is that whenever there is something like this Middle East conflict happening, okay, the chances of this company, okay, shooting up is quite high. There's a possibility. Okay. Okay. Then in the event that, because as I mentioned, right, the whole webinar is based on these premises that there is an escalation of the Middle East conflict. Okay. Now, in the event that the conflict did not escalate, okay, it just just keep on, it's just ongoing, just like the Ukraine Russia, keep ongoing, but there wasn't escalation. It don't spread out to Egypt, they don't spread out to Saudi Arabia, they just keep on ongoing. If I buy this share, what will happen? Okay, the price, as you can see from the history, right, the price is pretty stable. Okay, they have their up and down, but in general, right, they are on a very general uptrend. Okay, they are on a general uptrend. And even if the war did not escalate, right, at least you know that this company is having earning visibility and resilient. Okay, why earning visibility? Because I explained just now, their biggest customer is Singapore Armed Forces. Okay, whether there's recession or no recession, okay, Singapore will still spend on their military defense because Singapore is a very small country. Okay, and when they spend on military defense, ST Engine will be a beneficiary of it because they are the one who provide all the, the SAR-21, the AFV to these military, to the SAF. Okay, and I'm not saying that just because it is business. I'm saying I can have all these data that back me up. So you can see that their net profit, right, is very stable. Okay, it's very stable. There's no big up or big down. Okay, I mean, if you really want to find fault with it, you can say that the growth is very slow. Okay, but then again, in time of uncertainty, okay, what we are looking for is stability, earning visibility. Okay, so ST Engine provide earning visibility. Okay, and they also provide resilience against recession. Because no matter what, as I mentioned just now, even if there's a recession, it's very highly likely that Singapore will still spend on the military defense. Okay, and another good thing is that they are giving out a very stable dividend. They have a very stable dividend policy. You just look at the past 5 or 6 years. So in 2017, they give out 15 cents, 18 15 cents, 19 15 cents. 2020, even during the COVID-19, they still give out 50 cents. 21, they still give out 20 cents. 2022, they give out 16 cents. Okay, and in the latest dividend details, right, is actually here. Actually, they just announced 2-3 days ago. Later, I'll give. I think I have a screenshot on it. So you can see that they give out again 4 cents, and it's going to X on the 20th of November, which is 7 days from now. Okay, and they pay out pretty good. You see, 4 cents, okay, out of $3, $3.80, $3.90. So it's almost 10%, 1% plus 3%. Okay, this is only a quarter one, so it's about 1%. Okay, so if you time 4, you'll be about 4%. Or you can use this, this will be more accurate. Okay, 16 cents. Okay. Okay, so this is the latest result that was only released last Friday. Okay, so you can see that the revenue is up 9 cents. Nothing exciting, as I said. It's not a growth story. okay, is more of a resilient and stable story. Okay, stable growth. Okay, and dividend 4 cent. Okay, and yeah, so this just show you how stable and how resilient SD engine is lah, with or without war. Okay, of course, just now I showed you the chart. If there is escalation in the war, the chances of the share price going up is there, because when there's an escalation, people will, or rather Singapore will tend to beef up their military, just like any other country. Okay, so I have done with gold price, I've done with military defense. Then we say, hey then, Middle East, when we talk about Middle East, the first thing we talk about or we can think of is oil. Okay, why are you not talking about oil? Okay, so I can show you, this is the price of crude oil. Okay, the price of crude oil. This chart is taken, last taken over the weekend. Okay, as you can see, right, actually the chart didn't really move, the price didn't really move according to the Middle East conflict. Okay, the correlationship is not there. Okay, primarily for a few reasons lah. Okay, number one, okay, oil is that, I think I mentioned just now earlier, oil, unlike gold, there is multi factors. Okay, and OPEC plus is one factor. China demand, oil demand is another factor. Okay, and US oil supply inventory is also another factor. Okay, so there are so many factors that affects oil price. Okay, and Israel, right, for number two, Israel is not known to be a big oil producing company. So at this point in time, right, I don't see oil price reacting to that unless it really, unless it really affect like Saudi Arabia or even Russia. Okay, so at this point in time, the correlationship is still not that high. Okay, because Israel in itself is not a well-known oil producing company lah. Okay, I think maybe Malaysia is even a bigger oil producer than Israel. That I'm not too sure. I just making a good guess lah. Okay, so another factor is that, as I mentioned just now, right, a lot of factors. Even before this Israel-Hamas conflict, right, oil price has already been going up already. Okay, it has already hit a multi-year high, mainly because OPEC Plus has been doing supply cut. Okay, has been doing supply cut. Recently, they came down was a few reasons. Okay, number one is that US oil inventory has been it shows that it has been going up. Okay, number two is that there is a very big concern about demand from China, because China economy is slowing. Okay, so there is some oil demand concern. Okay, I read an article yesterday. They said that the OPEC Plus was saying that people are using it for speculative purposes. I don't know how true it is, but it seems that China being the second biggest consumer of oil as well. Okay, the worry, the demand concern, I think is there. Okay, then we just have to see how that transpire lah. Okay. Okay, so with that, I'm almost coming to the end of my webinar. As usual, all my webinar, there are key takeaway. Okay, so the first key takeaway is be nimble. Okay, be flexible. Okay, as I mentioned right at the start of this webinar, the whole webinar is based on the premises that there is an escalation in the Middle East war. Okay, but I don't have a crystal ball. I'm not a prophet. Okay, I don't know what will happen in the future. I don't even know what will happen tomorrow. Okay, so always be nimble. Let's say, for example, if tomorrow suddenly there's a cease of war, okay, or a truce of between Israel and Hamas, okay, then we have to just react to it. Okay, so we have to be nimble. Okay, it's not because, oh, then say gold is a very good investment, just buy gold. Okay, no, that is not the case. Okay, we have to be nimble, we have to be reactive rather than proactive. Okay, we have to react to the changing environment. Okay, now there wasn't much reporting on these Israel and Hamas conflict, but I'm sure in time to come, okay, we might hear on and off some news from there, okay, for good or for bad, okay. But I mean, for the sake of peace, I really hope, you know, things will turn for the better lah. Okay, but what I'm trying to say, in terms of investment, we have to be nimble. Okay, second takeaway is that stock market is not affected by just one factor. Okay, yes, today's topic is how does the Middle East war affect the stock market? Okay, but we also have to realize that the Middle East war is just one part of the whole puzzle. Okay, so we cannot say, oh, because there's an escalation of war, the stock market will surely go down. Okay, because there are also other factors like, for example, rate directions, inflations, China's slowing economy, and not forgetting we still have the Ukraine and Russia war. Okay, so there are so many factors that's affecting the stock market. It's not just because of one Middle East war. Okay, so we cannot just base our TCs, base our investment on just one factor. Okay, so I just want to provide you all with the whole picture, okay, and not just one part of a small picture. Okay. Okay, so with that, I have come to the end of my webinar. Again, okay, if you want to PM me, please scan the QR code on the bottom right hand corner to add my handphone number to your contact list. I mean, you can keep it for future reference as well, so that next time if you ever want to open a CDP link account, a trading account in Singapore, you can always WhatsApp me. Okay, always PM me. If not, you can also email me. Okay, and if you already know the in and out, you just want to open an account, you can click on the link here, bit.ly/ttp-dan to open an account with me. Okay, to open a Poyum account that's tagged to me. Okay, do join the Stock Market Buddies Telegram, the Investing Note Stock Market Buddies, and I myself, I also have a free Telegram channel as well. Okay, feel free to join as well. And with that, I want to thank you all for the attention in the last 1 hour. And back to you, Darren.
Thanks, Dan. I think it's a very, very good sharing and a comprehensive sharing of today. So, all right. So I think right now it's already 3 p.m. And thank you, Dan, for coming over to Investing Note to share your views about the Middle East war. And definitely, we hope that the war can end as fast as possible and back to peace for the whole world. All right. So, thank you, Dan, for sharing, and also good night for everyone. We will see you in the next sharing session. All right. Thank you, Dan.
Okay, see you
Thank you.
guys.
Thank
Thank
you.
you.
Bye bye.
Bye.